Okay, so I'm going to show you a way that you can capture a portion of a trend, even when you think that this trend might be close to fizzling out, or you might already be at a top. I'm going to show you how to kind of distinguish between a market that's going to continue running up and something that isn't. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. So what's happening here is on the right hand side of my screen, you can see that we have a really solid up bar, a trend bar, headed straight up, and we've absorbed a lot of buying on the way up, and we've created several new volume nodes. And then most recently, you can see both on the footprint chart and on the dome at the price 26.66 even, we absorbed over 2,000 contracts of buying there, right? So there was somebody that was building a short position there, but we still bought through him, went up, and then we're kind of testing back down here. And so what I want to point out is right now you can see at 26.65, we absorbed a lot of contracts on the bid. And you can continue to see that happen. It doesn't necessarily happen at one price level, but it's usually spread across several price levels. So what you want to see is every time they try to sell this down, we have motivated sellers. You can see them, 26.65. There was just 400 contracts there, and every time they kind of tick down or they try to sell, somebody steps up. Somebody's absorbing all of that selling. And so what's happening here basically is there's somebody building a big long position right around 26.65 even. And they're going to do that by camouflaging their order. They're not necessarily going to put in all of their orders right into the limit as limit orders in the book, so you won't see them showing up here necessarily. But what you can see is that every time it ticks down, they stack another order there, and they keep basically propping this thing up. And this often happens kind of right at the bottom of a mini volume node. So you can see on the footprint chart, we went right down to that 26.65, which is the bottom end of this volume node here, and we absorbed a bunch of selling there. Now, if you didn't think about it this way, or if you were trying to catch a reversal, what you probably would have done, which wouldn't have been a great way to trade this, is you would have been trying to get short right here at 26.66 when you saw those 2,300 contracts absorbed. You'd think, okay, well, there's a big seller up there. There's somebody that's building a big short position, and so I'm going to fade that iceberg. The fact is, you don't want to fade every iceberg that you see. It doesn't work in general. Sometimes it works, but it's not good advice to just kind of follow blindly. What you want to do is understand the dynamics of what's actually happening and get into the minds of the big participants in the market. And what we see here is that those big guys, those big institutions that are trading this, want to see this continue going up. Even though we've had a really, really solid uptrend, we're not seeing signs of reversal here. We're seeing very strong upside potential. So at this point, I'm thinking that, okay, well, I may have gotten left behind on this trade. As you saw earlier, I tried to get long there at 26.65. I didn't get filled on my limit order, and so I let this thing go. It's not good practice to try and chase it if you do get left behind. The best thing to do is wait and let it play out, and if something sets up that makes a lot of sense to you, then go ahead and take it at that point. But you don't want to get biased or anchored on that previous trade and then try and chase that, because you're likely to buy it at a really poor time. Okay, so I'm just going to kind of speed this up so that you don't have to watch this play out in real time. So what it's doing is just kind of chopping in this range, and I'm looking for signs that it's gonna go in one direction or the other. Okay, let's slow this down again. Okay, so now what's happening is we have some sellers. You can see that on the tape. We have some big sellers. And it's moving down, but you can see, you just saw it 26.65, 300 contracts absorbed there, and more contracts stacking there. And so we're moving back down to this mini volume node that was formed right at 26.65. And you see that 359. So what I'm looking for is the same type of thing that I was seeing before. Basically, hidden liquidity on the bid. See that 240 orders stacked at 26.65.25. So I'm looking for that hidden liquidity. I'm looking for someone who's building a big long position here and who's gonna push this market up or plans to do that, but doesn't necessarily want people to know his intentions. So you can see that the bid doesn't look super thick. 50 contracts, 266. Okay, 279 now at 65, 364. It's not particularly thick until you get down to 264. So what's happening here is he's not stacking all of his orders on the bid. He's not just entering them as limit orders, because that would convey his intentions, which is to build a big long position here. Instead, he's kind of surreptitiously putting in orders, what people call an iceberg order, to go ahead and buy. But if you think about it just as an iceberg order, it doesn't convey the entire meaning here. The meaning is that there's somebody powerful in the market who's absorbing all of that selling because he's willing to build a big position, a big long position, most likely because he's going to push this thing up. And now that happens over a series of prices. It doesn't just happen at a single price. Usually they'll do that over 2 or 3 or 4 price levels. And it doesn't necessarily mean that he's going to push this up above the high of the day, though that's what ended up happening. Oftentimes, if somebody's building a really big position, they're a big player, they're moving a couple thousand contracts in and out, all they really need is to get a few ticks out of the transaction to make it extremely profitable. So you have to realize that. You have to realize when this guy is in, when he may get out. And so the reason that I exited there at 7 ticks is because I don't know how far he's actually going to push this. When somebody's building a big position like that, it's more than likely that he was stacking his limit orders on the offer as well, his exit orders. So prior to him building his full position, he's most likely putting in his orders to exit on the offer and then exiting on the way up as well. So I didn't know exactly how far this was going to go. I'd much rather take my scalp and then look for further behavior that I recognize and I can trade, and just go ahead and get in again if this thing is going to keep on running. So the key thing is to frame the market behavior that you're seeing into a context based on understanding of what the current market participants are trying to do. Please like or comment on the video and let me know if I should make more.